Welcome back to Trading 360. Time now for the 360 round, and we're diving into earnings from Marvell, which has shares are under pressure today. For that, let's bring in our panel: Stephanie Walter, who is a analyst in residence at Hyperframe Research, and Shana Sissel, who's the founder CEO of Banner Capital Management. A nice ladies lineup today. I'll start with you, Shana. I'm just wondering, we've seen a 16% sort of sell-off today. Is that justified, given that we saw this largely in line with estimates?
So the stock has largely underperformed for the last year or so, and I think that it's probably a little bit of an overreaction. The company did, as you noted, report in line. They were up over 58% in total revenue, and it was an all-time high for them at over $2 billion for the quarter. I think that's notable, and I'd like to point out that a year ago they actually reported a loss. So the company has clearly turned around. The stock price is not in any way, shape, or form reflected the turnaround that you've seen, but also the expectations are high, and I think that's reflective of anything that has to do with AI, and in that sector, especially the chip makers. The expectations are so high that unless you come in and blow the cover off the ball, you're going to disappoint the street.
Yeah, absolutely. I mean, it just seems like imperfection is being punished. But Stephanie, I want to get to you as far as what we're seeing here. It seems like the fly in the ointment, and the disappointing part of all of this, which is what investors are reacting to, is the weaker guidance and the miss on sales in data centers. I'm just wondering what you're thinking about that.
Well, I mean, I do agree that anything that is associated with AI has extremely high expectations, and Marvell is rapidly transforming into a company focused on data infrastructure with its core business increasingly centered on AI. And so the company's data center revenue has seen substantial growth driven by a significant ramp up in custom AI silicon programs. So this shift indicates Marvell is no longer a general purpose semiconductor vendor. Its future is tied directly to the growth of AI infrastructure, particularly in cloud and hyperscale data centers. So this strategic pivot positions the company to capitalize on the massive demand for high performance, purpose-built chips needed to power these next generation AI models and applications. So this means that the company's success is now inextricably linked to the continued investment by major cloud providers in AI compute and connectivity.
So in that sense, would you say that what we're seeing as far as the investor reaction today is a little bit of an overreaction, given what you're saying? Because it seems like a bit of a similar story with what we saw with NVIDIA, even though completely, separate businesses and stories here. But as part of the whole AI theme, very much the weaker data center sales seem to be, the disappointing part of the NVIDIA report. But at the end of the day, the big takeaway was that the AI story is still very much intact here.
Yes, the AI story is definitely intact, and I think that as companies try to operationalize AI, and there are a lot of considerations that need to happen to really extract value from AI, and sometimes that can take a little bit longer than investors would like.
Yeah, absolutely. I mean, it just goes to show that the bar is so high for some of these tech companies. I'm just wondering, when I was talking about this yesterday, it seemed like some of the concerns also, and where we've sort of seen some of the bifurcation, Shana, in the AI story, particularly when you're looking at some of these companies in the business of chips, is their exposure to the industrials and also autos, which seems to be a bit of a weak spot. Does that concern you at all, as far as what we've heard from some of these tech companies?
Well, in Marvell in particular, they just had a divestiture of their auto business. So they have made it very clear that they're going to focus more on their core data center, cloud, things of that nature in the AI world, which is where they have a ton of demand. And I also like to point out that their customers are less concentrated than, say, NVIDIA. NVIDIA has a lot of top-heavy concentration. Now, neither firm has like hundreds of customers that make up the bulk of their revenue, but Marvell's is not quite as concentrated as NVIDIA's. That said, the focus is, they're restructuring the company. They're really focusing on where they see the most demand, and that's important. I've been following this stock for a really long time, and the one thing that I can tell you had been historically an issue for Marvell is their inability to meet demand. They always had a backlog of requests and a backlog. What we're seeing is them pivoting to the areas that have the most revenue opportunity and the most demand, and more importantly, being able to meet that demand and subsequently turn that into revenue, which is where they struggled in the past. I think the stock is, and investors are overreacting. I think the stock is actually relatively cheap compared to the rest of the competitors. And I think that overall, this is a good long-term story, and I personally would be a buyer here.
Okay, well, I suppose investors just need to be patient with the sort of lumpiness that they had referred to as far as, the guidance with the large hyperscalers building out their infrastructure. So perhaps waiting for a little bit more clarity on that. But it's been a fantastic conversation. Thank you so much, Stephanie Walter, Hyperframe Research, and Shana Sissel, Banrion Capital Management, for joining me on this Friday. Have a great weekend. All right, thank you for joining us here on 360.